Well, good evening, everyone. Welcome back to the channel. So, boy, do I have a good one for you all this evening. I'm gonna coach you all on how to earn 15,000 a month in dividends with investing in growth stocks. Now, how in the world is something like that possible? Well, it takes some money up front. So, I want to run through a real world scenario here. So, uh, say that this is kind of like a what if, I guess. Uh, we have a first again from Mr. Richard King, first place trophy. Welcome. Okay, so I know of people that put a ton of money into Yield Max a year ago. Welcome. And, say like close to like six figures into Yield Max. And over that time, like I've been starting to harp on more and more, there were many, 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 many growth stocks that far outperformed the likes of Tesla and some of the others. Take Nvidia, for example. Now, I know NVDY happens to be like the top yield max fund. Well, hey, welcome. Other than MSTY in terms of total return, it's up like 120%, but its underlying happened to be up 250% over the same time frame. Yeah, welcome, Dissector. I see you're active working at creating memes there, some funny memes. Well, I'm not sure if you created the one that you posted, but it is funny. Anyway, so like I'm saying, so in an alternate universe, say that many folks that went into yield max went into growth instead. I'm going to run through a real world example. So in this case, say you put $85,000 in Tesla a year ago. Well, you would be down like 43% in price return. Total return is not as severe, but it doesn't matter. That's not the point. The point is that in this case, like I'm going to show you, had you invested in, say, NVIDIA stock, you would be far better off. And you would have gotten a dividend too. And I'm going to show you all exactly how, because I know you all like salivate over $15,000 a month dividends. The prospect of that is like hitting the lotto, right? So I'm gonna show you all exactly. It's not what you think, but I'm gonna show you all how it was definitely possible. Yo, Coach, YMAX bullish. Yeah, we might look at that one, but this is a really important example I want to run through. So, okay, so here we go. This may surprise some of you all, but I've worked out some spreadsheet analysis here. Not that part. That's not the surprise. The surprise is what's in the spreadsheet. So here is the 85,000, which I know people that put 85,000 in Tesla, uh, which is I guess unfortunate. That's a big chunk of change. So if you put $85,000 in Tesla a year ago, you would have at this point. Let me see if I did this right. No, it's the opposite actually. Let me do this. It's worth basically 57% of what you had before. So it's worth 48,000 now in terms of price if you didn't reinvest any dividends, right? So that would be a loss of $36,550 divided by 12. That is a total loss. So forget the dividends, okay? That's a total loss of $3,046 per month over that time frame. Okay, so that's Tesla. That's like the worst end of the coin. So the better end of the coin is NVDY, right? So say you put 85,000 in the same fund, NVDY. Of course, it's not quite an apples to apples comparison because this went public May 11th. So if you had done that, uh, in terms of price return, you would be up 47.51% in terms of price return. And of course, you're getting huge dividends on top of that. So in terms of total return, to be fair, I guess we can say this. It would actually be, it's actually 125%. So in finance, we add one because it's a whole number. So that would be 106,250 in profit. So you would have more than doubled your investment, which would be 8,800 per month in total return. So let me do this here. Since I don't have the dividend in front of me, I will just take, let's see here. We'll just take this 106,000 type this over here, and I'm getting to the main point here, which you all can see if you all are very, very savvy. You all can see where I'm going with this. Um, okay, so let me just take this number here and kind of like compute a dividend. So what did I say? 1.4751. 1.4751. That's your price return. So we would assume that the rest of this would actually be dividends, right? Or in this case, return of capital or option premium payouts. Okay, so that's 65,867. Forgive the mad scientist, he's at work here, also known as the coach. Okay, hold on. What did I say? I forget what I say. 65,000 and change. 65,867. Okay, here we go. 65,867. So this is kind of an ancillary number. So ignore this for a second. We'll even draw a line through it to ignore it for a second. And we'll put a nice dollar sign by it so you know that it's money. And we'll move these zeros away too. All right, so that is, ignore that. That's like the dividend, but in terms of total price return, that's 3,300 or almost 3,400 per month. Now the dividend, that's 5,500 a month on the initial investment. But the underlying Nvidia stock, which I keep talking about, let me do some comments here. Let's see if any of you all have figured me out yet. Why max more like why mid? Or you mean like why min, like MIN, like minimum instead of maximum? I figured you would make that joke. Mid is kind of a little, mid-range. Max is my analysis that I'm doing right now, on the other hand. Okay, so no one has tried to guess on me here. Okay, now here is the point here. 85,000 in Nvidia stock over the same time frame would be worth, drum roll, $272,000 in total return over the same time frame. Subtract this from this, it's $187,000 profit on that $85,000, which in the same fund, or not the same fund, but the same investment in a different fund, totally different result, night and day, right? So take this 187,000, which is like double or triple what most people make. That's $15,583 a month. Now this is growth investing. So this 15,000, you can call it a dividend. And this is an important lesson because so dividends are not free money. Dividends are actually, they come out of typically the cash flow of a stock, or in this case, option premium, because these are synthetics with yield max. So dividends are a component of the total return. When you take finance class, like basic corporate finance class, when you do like your basic stock growth models, they always have like the dividend and the growth in the equation because it's all part of total return, right? So a dividend is a component of total return. It's like if you run a business and you made like $100 profit and say you give $5 back to your customers, it's a $5 dividend, but it's like the total return. It's not coming out of thin air, it's coming from somewhere, right? So, moral of the story, so how would you get this almost $16,000 in monthly dividends, right? So if you were to, so say you held Nvidia stock. Now watch this. We're going to add another cool layer to this. Tax treatment, which doesn't get talked about too much. So if you held this for a year and then you sold it, you would have this profit. And because it's over a year, it's what they call long-term capital gain, which is instead of ordinary income, which could average, say, 28% tax bracket or so, 15%. So this 187,000, when you sell this, and you only pay this when you sell it, that's a 15% tax rate, which is still, pretty high. $28,000 is a lot of money to fork over to Uncle Sam. Of course, italicize it here. I'll even cross it out because we would rather not have to do that. But then here's the thing, right? Like with this over here, with these dividends over here, right? Say this is ordinary income. I think I'm doing this right. I know people will correct me in the comments if I'm not. But if you're at, and I can already envision the comments. Somebody's going to say, "Oh, but that's taxes are marginal." So I was about to do it by 28%. Let me just average it. Let me say like 22% for argument's sake. So then, okay, I get it. It's a less in terms of dollar amount, but 22%. It's a smaller dollar amount because you invested in a lower performing product. But your tax rate's higher because you're paying ordinary income, right? Let's just say even 25%. You're paying, so it's a lower dollar amount, but if the same tax treatment happened over here, if this was like your dividends, then see, it's much higher. See, so your tax bill is much higher over here in this scenario. But anyway, moral of the story is, so if you sell this, you pay yourself. So income is actually a component of growth. In most cases, there has to be growth for there to be income. If there's no growth and there's income, there's a problem. Something's missing, something's not balancing in the equation. So if there's income but no growth, you're going to end up having a bankrupt fund before long. So that's kind of the sad part there. But with growth, income is a component of growth. So in this case, if you were to sell this, you have a nice huge capital gain, and then you pay yourself the dividend. You might want to reinvest it. If you don't need the money immediately, you might want to reinvest it in something else. But the point is, there's a lot more money being made in this scenario. So in this example, this would be like a fat $15,583 dividend per month. Let me bold that, make it nice and bold there. Okay, let's do some comments. Let's see. No comments. Wow. Are you all just like mesmerized by the presentation or what? It only took me like 2 minutes to do. Abhishek, let me see if I get this right. Abhishek Vinjarapu, did I get the name right? Says, why did Defiance IWMY drop drastically? Uh, Probably because of a dividend, I'm thinking. Anyway, so where's all the comments, people? I just showed you all how to make $15,000 in monthly dividends. That's like double what some of you are getting in YieldMax. Yeah, NVIDIA is a dog, right? YieldMax is corny. How about Coney, the YieldMax, the Coney fund? Underperforming, but more dividends. Oh, that sounds like a strongman finance saying. We got to get him on eventually. That would be really cool. Keith Allen says hello. Thank you for that. Now we're getting some comments. Okay, so yeah, 15,000 in dividends. So a dividend is a term. It's income, which is a component of growth, right? Okay, let me do this here since I've been going here for, let's see, 12 minutes. Let me look up for Mr. Abhishek over here, IWMY. We'll get into some bonus here. Oh, let me show you my Seeking Alpha chart that I put together here, the source for the numbers. Okay, so check this out. This is Tesla is down 53% since a year ago. It's funny because I've actually been in, when I got Tesla, it was like April 13th, 2023. So it's almost been a year. NVIDIA, 220% over this time frame. NVDY, 47.51%. But then, of course, looking at total return. And there's another site I'm going to start using as well. Okay, so 16.59% in the negative when we factor in dividends. NVDY, 120%. But NVIDIA is the beast of the group. Okay, now for Mr. Abhishek here, let's look up IWMY. I'll look at the chart here. Ooh, what do you see? Oh, well, that's S&P. But look, opposite directions, right? It's like a V shape, a sideways V. It's like it's got its mouth open for dividends, but the dividends are coming in, but the fund is not recovering. So it's like empty calories, I guess. Okay, let's compare this. Let's get rid of the S&P and let's add IWM, the Russell. By the way, I have I haven't even announced this yet. Actually, I've been so busy. I have Howard Chan he's the CEO of Curve Funds coming on tomorrow. I haven't even created the live stream yet. So I actually have no idea what I'm going to ask him because I just had Sheng on. We're starting to get a lot of fund managers on here. So submit more questions for me so I can ask the CEO of Curve Funds. Not a trivial person. That's the CEO of the company. That's a pretty big deal, right? We have Sylvia coming on the podcast tomorrow. By the way, so I need to, I got to talk to Blake and Andre, of course, but we want to. So we're actually going to have the Cash Flow Kings, Ryan Dingler and Fiscal Philosophy on our podcast Thursday. I want to make that live so we get comments. So I want to get So I don't control the StreamYard there. Actually, Andre does, but I'll try to get him to create that in advance and go live. And then we're going to have on, I have two other fund managers in the works just to go over some kind of what's going on the back end here. There's a couple of other fund companies. I'll announce those closer to when we actually get them on. I talked to one today and the other one we had an email exchange. Anyway, where was I going with this? IWMY. So you see the same thing over year to date here, opposite directions. So the big drop today had to have been, was it ex-dividend day or something? Let me go look at Defiance real quick. Let's see, Defiance, the big D, Defiance. We can ask Sylvia this tomorrow. I honestly haven't prepped any new questions. Let's see. We're looking for IWMY. Let me look. It's a 72% dividend. So why are you upset about it dropping? You're getting income, right? Yeah, that's what it was. That's exactly what it was. Like I said, it was because today was the ex-dividend date and the date of record. Yeah, that's why it dropped. So there's your answer. All right. So today's session was light on the comments. Yeah, I like Curve. Their fees are a little bit higher, but they're more stable. Well, here's the thing. So their version of Tesla, I was looking at it. It's actually because Tesla just sucks as an investment. Let's be honest. It's actually comparable over the last month or two with Tesla. Sad to say, but most of their funds are more stable NAV and lower dividends. DC, sorry, I was listening but watching TV at the same time. Oh, well, we had to get you to comment at least before the end of the video. DC. Yesterday it down 6.5. Yeah, well that's okay. So there's 4 dates, all right? They're paying out a dividend. So they had the declaration date, they had the ex-dividend date, they had the record date, and then finally the payable date, which I believe is Friday. So that's why it went down. Anyway, well, thank you all for tuning in to today's coaching session. I hope that was enlightening and informative. I hope nobody, roasts me because I'm not bashing yield max. I'm just saying growth is actually better than income in this case. All right, you all. Thanks for tuning in. Like, comment, and subscribe, and we will see you all tomorrow. Or, well, I think that's it for me today. So yeah, it would be tomorrow. All right, you all. Take care. Have a good night. Bye.